Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we're at November 2nd, 2020, about 6:40 p.m. Central Time. I did not do any updates this weekend, as you saw, for the YouTube and the free viewers. My subscribers, they got my updates. And the reason was I said, I'm basically wasting my time. I'm certainly not going to tell you in front of an election, do this, do that, or point you in a direction. You have enough people doing that if you're watching financial TV. Now I'll come back and start talking what's going on. But here's my strongest piece of advice. Do nothing. These are futures markets. They're going to wait up. If you've got your 401k, your other programs, your pension plans, that is a whole different world as to how you manage that than trading in the futures markets. You're going to be trying to fight the algorithms. You're trying to position yourself and outsmart what the election results will come in. Are they the result? Are they preliminary results? Are they going to change on you? Will they even be announced? We have so many mail-in votes. It broke all the records in America. They get counted in different states in different ways, and many of the swing states. Who's going to win the Senate? Who's going to win the presidency? I don't think any of us are worried about the House. I think it'd be a dream of the Republicans to think they could take that, and I think it'll stay a dream. But I do think the Senate is very much up for grabs, and the presidency, of course. And will we find out? Well, we'll probably find out more about the Senate than the presidency, but that also gives you an idea of control. Now, the market has taken the opinion that a Biden win is bearish for tech stocks, and bullish for, be it the papers, could be motor companies, the old-time manufacturing. A win for Trump keeps the tech in play. In fact, they've sold off so much, they may surprise the market to the upside. I think that whatever party wins, there's going to be a massive amount of spending in January. I don't see lame duck Congresses getting anything done. So I think January is when you're going to see that, but the market won't wait for January. It's going to decide that a Biden trade is a reflation trade. Keep your eye on the gold. A Trump win is probably not that much inflation, but it's there because he too will want to spend, and it depends who controls in the Senate. That's where I see the markets right now, and how you position yourself, well, better people than me have done it. I feel very good at what happened today in the energies. I was looking, and I was on Bloomberg last week, and I was asked what I thought of the energy prices. The segment was devoted on BNN TV to what I thought, a large part of it, on the energy market. And I thought that between 35 down to the low 30s. I'm not talking $30. The low 30s could be 32, 33 was about it in WTI crude. Well, as it turns out today, the market broke down into that 33 range today, and out of nowhere, we get a note that comes out on the press that the Russian producers have talked to the energy minister, and they're in favor of extending their production cuts by another 90 days. That came out of nowhere. Market turned on a dime. So you were down 2.5%, 3%. You went up that amount. We'll see that in a moment. We'll see how this plays. Why did they do that? Well, they did it because if they bring on more oil, then you're going to crack $30, in my opinion. But I was counting on that. Libya is up to 800,000 barrels a day again. So let's look at the stock market. We have a series of lower highs so far. 35.0450 on a closing basis, and the next highest close was 34.73 1/4. I am still of the opinion, doesn't mean I'm going to be right, we're going to get a Santa Claus rally. History shows that after you get through the initial shock in a normal, I want to use this word so carefully, normal election, that wears off and the market often rallies anyways. Here's what I don't know. I don't know how long this could go into a court. Do I think this election's going to be contested? You betcha. Do I know which parties are going to do the contesting? I wouldn't be surprised if both go to court. When will that get resolved? How quickly do we know? I don't know. So while I expect that Santa Claus rally, there's a caveat. I need to know who's going to be the president. And if it just drags on, that uncertainty will throw that thinking away. That's where I'm at. So coming down here, very interesting. As you see in this market, we've almost had these type of moves. Straight up and almost a straight down move. Do you think you could catch that? And some people did. I know I was telling clients to trade it. It was fun and it was trending. Now the question is, what do you do? Are we still trending? Yes. If you throw off the name, throw out everything you know, the pattern on the chart is still one of lower highs and lower lows. That's a trend. You'd have to get back over this 3,400 area to break it on this chart right now. The market is finding some basic support at the 100-day moving average of closes, and if it finds it there, it's not unusual to go back to the 18-day average and fight a battle that way. If this gives ground, another moving average awaits the market, the 200-day at the 3113.75 level. In terms of Bollinger Bands, which is an algorithm designed to keep the market trading within the bands 95% of the time, the market tried its best to stay out of the band, got out here, came back into the band on Thursday, down under the band on Friday, back into the band today. So the market's doing its job. It's fighting there. It's also saying that it doesn't want to stay under the band, but it's willing to ride it. What does riding it mean up until today? It means that each day you're hitting that number. Now we're starting to drift to the right on this, which means to me the market most likely isn't going to try to hit that Bollinger Band tomorrow. It's going to try to hang in here. The market is oversold in a downtrend, has hit downside support levels, and it's awaiting the election. Can I be any clearer? In the NASDAQ, oversold, went to the 100-day average in green, the lower Bollinger Band. It actually began hitting the Bollinger Band here, and it's starting to move to the right of it. Is the trend down? You betcha. You've got lower highs, lower lows. Is the bias down? Oh yeah, you're under the 18-day average. What negates the downtrend? Taking out 11,457. So you'd have to rally 300 points in this market to negate it. I don't know that that can be done tomorrow. What about embedding? Embedding is when the slow stochastic gets both numbers that make it up going sideways or drifting sideways under 20. Both numbers are under 20 tonight, but we're not close, so you don't know what that'll do. Both numbers were under 20 for the first time on Monday, not on Friday. So maybe we can get the most 2 days in a row, and we'll see what happens. Staying under this 100-day average, I think that the longer-term traders, the people that look at moving averages and have this theory, and this is something a lot of people don't teach you. When a market's over a big moving average, and it finally falls back to that average. Let's call the 100-day, the 200-day in stock indices, the big averages. Often, you'll find that a group will say, you know, that's the number I want to own this market at until it proves that it's anything but a correction. I think they've stepped in there. And I think those people are going to ride through the election to see if they're right or wrong, and time will tell them. What about in the Dow? You did it a combination here, there's the 100, and the 200, these people were drooling. They're going, I got to own that going into the market. The odds favor this market has stayed over it for a long period of time. We don't have the 200-day that goes far on the Ds, but you know you have it in the cash markets. And the market has been over it a very long period of time. Is it my style of trading? Absolutely not. Are there a group of people with that? I've seen them. I talked to them. Yes. I know that they exist out there. I've done this a long time. Sometimes they hit home runs. Sometimes they'll say, okay, I'm not in it for that short pull. And then eventually when they pull the plug, it could be very ugly. What about the Russell? The Russell didn't even make it back to the 100 or the 200. But this is the effect of Joe Biden. The small caps favor Big Joe, and we'll see if the market can come down and do anything with it. Right now, it's refusing to stay under the Bollinger Band. The VIX cash got up to the 41.16 level and has suddenly given back about 5 points. In the process, if we really look, you were over the upper Bollinger Band on a close. This day, the market was over it. That's 2 in a row, 3 in a row. Come on, you were over it 4 in a row, not here. The odds of getting to 5 are small. You can, and I've seen 9. We just saw it on a chart. I think it was a meal. But if you play for those, the odds were this market was going to pull back, and that's what it's done. Have we broken the back of the market? Well, first of all, there's no back to break. You have a lower low and a higher high. You have a vertical price rise off the coming election. It wasn't a trend. You're still very much in a downtrend in the bonds. The sense of that, if Joe Biden wins, the market thinks America goes on a spending spree, and that causes the need for higher yield to attract money. At the other side of the argument is the Fed that said, no, 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 I'm going to keep interest rates low. Let the election first happen, then we'll see the Fed. Let me tell you my experience in this. You don't fight the Fed at the end of the day. They have more money than the speculators. Can you beat them? Not beat them, push them day to day in different areas? Of course you can. And the election is one of those areas. But the election doesn't mean that all of a sudden you're going to take the 10-year to 1.2%. Just to give you an example, it's 0.84 tonight. That happens, you're going to have the Fed's attention. By the way, that brings up, we have a Fed meeting coming up. Do you honestly think they're going to make and release anything that says they're not just observing? They're not. They're not going to initiate a new action here. I mean, I can't promise you that they're not, but I can tell you the odds of them doing that have to be like 1%. Even with COVID, you've got to let the market know what's going on, who's ruling the country, and then the Fed can make decisions. Lower highs, lower lows, all you did is back here you hit the Bollinger Band, you rallied. You hit it again, you're getting a bounce. That is so typical, but the market's in a downtrend. 10-year notes in a downtrend. You rally back to the resistance zone, you fall back, could happen again. You are oversold in both the bonds and the notes, but in downtrends. Dollar index. What do I teach? First time you hit Bollinger Bands, you're coming out of markets. That's what I teach. You don't have to agree with it, but that's what I teach. And when you get up to the combination of a 100-day average in the Bollinger Band, that's it. I admit an election of this magnitude changes the landscape, but it doesn't change the rules. A chart is a chart, and that's what I teach. You're overbought in a resistance zone. In the euro, this is where I think the pros are covering their short position. You're riding the lower Bollinger Band and you are not embedded. You're oversold. I'm looking for the market to give you a spin. Don't know why it'll do it, but that's what I'm expecting. The trend has been down. You hit for the first time the Bollinger Band right here in the 100-day average at 116.82, and the market is 116.54. You haven't given up anything if you took the smart play, as I call it, taking some money there. The Japanese yen has still got a pattern of higher lows, higher highs. There's some divergence. The momentum got overbought and fell back, but it's no longer overbought. Trend is up until you take out the low here with resistance at 9,600. In Bitcoin, I don't know why I have the October here. I guess it still has a price. I don't understand that. We should be now in the December, so I'll keep it here, but I'm going to move you to the DECE. Just keep your eye on that. Let me bring the DECE up and give you a better speech on that come tomorrow. In the Brent, WTI. Okay, so the differential between the two is about $1.67. So whatever's happening in our oil's happening to a degree in Brent, and as I said, the Russians, they understand the game. And they understand that at $37 today, Mr. Novak, I think we should talk about maybe we don't release more oil on the market because 37 can become 32 very quick. They don't need that. They need to keep the market in check in some manner. They realize COVID has shut down again their market for Europe. Factories are still open, but do you really think, is the COVID spreading there, a lot of people aren't calling up, hey boss, I don't think I'm coming in right now, I'm not comfortable. They're not going to fire that man. Hey boss, I'm sick, I have chills, do you want me to come in anyways? They're not going to tell the man to come in. You understand what I'm getting at. WTI crude, that was the news today. So now, You got down as low as 34.04. That fits very much in what I was talking about. You made a higher high, you've negated the downtrend. You didn't do that in the Brent yet. You still have the lower highs, lower lows. What did you do in heating oil? Same thing. So until I have reason to think different, this may be a winter low. Winter low, wouldn't surprise me. You kept coming down with the COVID fear, but at some point we're going to get warm again. Now, not in Chicago. We're going to go up every day to 71 degrees, believe it or not, this Saturday. Every day we're going back in the 60s. I woke up last night in the city, 29 degrees. So don't think that this is normal. We start getting much colder. And of course, the daylight's gone because we have our time changes. The natural gas, higher high, lower low. We'll see what's going on. When I say daylight gone, we're dark earlier. We have more daylight in theory. I don't understand this whole concept. It's in theory. I've not been a fan of doing this. I think we should do away with this daylight savings time, but that's just me. Trading between literally the Bollinger Bands, I don't think you want to do too much with that. So you put it together, you've got a market tonight that's going to be a little bit of everywhere. For most traders, it's a thing to avoid, not enter. If you're going to enter, at least have a game plan and understand maybe you shouldn't carry through tomorrow night. That's where something like a pivot point comes in for your in and out trades. And when you use these mini stock indices, the 1/10 the size, this could be fun. What a pivot point does is it uses yesterday's open, high, low, close and has a formula from it. You find the pivot and then resistance points above the market and support points below the market. They'll look like this. What you're trying to do is buy the support, kick out at the pivot, sell the resistance, buy back at the pivot, and I introduce slow stochastics to it for timing. It's a 3-part video series. It's free. Go to our website under free offers on the right. Click there, look in the offers, sign up for it. We'll have it to you tomorrow. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.